Did you know that the most common QuickBooks problems that small business owners have aren't software glitches? They're setup and process issues. If your reports don't quite match your reality, or something just feels a little off, this video is for you. I'm walking you through 5 mistakes that show up constantly and what to do about each one of them. Hey, I'm Thompson with TMA Accounting. We work with small business owners every day to help them with accounting, taxes, and payroll. So we know QuickBooks is a really powerful tool, but it's not magic. A lot of owners set it up, connect their bank account, and assume the hard part is done. It's not. Today, I want to show you 5 places where things quietly go sideways in QuickBooks and what you can do to get them back on track. One mistake a lot of small business owners make is treating QuickBooks like it runs on autopilot. Connecting your bank account is a great start, but QuickBooks still needs direction. It records transactions, it doesn't interpret them. And if your chart of accounts is disorganized, your expense categories don't match how your business actually works, or your bank feeds aren't syncing correctly, every report you pull is going to be built on shaky foundation. Garbage in, garbage out. The fix is simple. Review your setup at least once a year. Make sure your categories and account structure actually reflect how your business operates. A 1-hour review can save you months of confusion later. Mistake number 2. Treating bookkeeping and accounting like they're the same job is a mistake that happens all the time when working in QuickBooks. We actually did a full video on the difference between bookkeeping and accounting. Dan broke it down really well. You can watch it by clicking right up here. But here's a short version. Bookkeeping is recording what happened. Accounting is understanding what it means and what to do about it. A lot of owners stop at the first part. You're logging transactions, keeping up with the data entry, which is great, but if your reports never get reviewed, you're missing the whole point. You might have clean books and no idea whether your margins are healthy, whether you're setting aside enough for income taxes, or whether your cash flow is trending in the wrong direction. Set aside 1 hour a month to actually look at your reports. Ask real questions. That's where the value of all that data entry starts to show up. Mistake number 3. A lot of business owners trust their QuickBooks reports without ever checking whether the data behind them is actually right. And here's how it happens. You've got unreconciled bank accounts. Maybe a few transactions that snuck through your bank feed. Expenses sitting in the wrong category. None of it feels urgent in the moment, but over time, that starts to add up. A few months later, your profit and loss report shows a number that doesn't make any sense, and you become an archaeologist trying to excavate what happened.
Snakes. Why did it have to be snakes?
The fix? Reconcile your accounts every month. Match your QuickBooks balances to your actual bank account and credit card statements. It's not exciting, but it's the thing that keeps everything else honest. If you're finding big discrepancies, that's usually a sign it's worth bringing in some professional support to clean things up. One thing that really causes problems is when payroll and taxes are running completely disconnected from QuickBooks. This is really common. Payroll runs through one system. Tax payments happen somewhere else, and QuickBooks has no idea either one of them occurred. That setup might feel manageable for a while until you look at your labor costs and realize they're nowhere in your reports. Or you get to income tax time and the numbers don't connect. Here's why it matters. When these things are integrated, payroll data flows directly into your expense accounts where it belongs. Your tax liabilities stay current instead of showing up as a surprise, and you're not manually re-entering data that should already be in the system. This is actually one of the reasons TMA brings accounting, payroll, and income taxes under one roof with one team. When everything is running through a connected system, your reports reflect what's actually happening in real time. That's a really different experience than chasing down 3 separate vendors to tie together one complete picture. Probably the most common mistake is assuming QuickBooks can do everything an accountant does, because it really can't. QuickBooks is a great tool, but it doesn't interpret your numbers, it doesn't flag compliance risks, and it won't tell you something looks off in your payroll, or that you're heading towards a larger than expected income tax balance. It records what happened, but it takes a skilled accountant to understand why it happened and what to do about it. Even a quarterly review with an experienced accountant can catch things up that would otherwise snowball and give you the confidence to actually trust what you're looking at.
Now it all makes sense.
If you found this helpful, hit like and subscribe. We put out videos like this regularly, and if you want to learn more about how TMA can help you with your accounting, QuickBooks, payroll, and income taxes, head to the link in the description. It's got everything you need to know about what we do, what it costs, and how to get started. QuickBooks is a great tool when it's set up right, kept current, and backed by someone who actually knows what they're looking at. That's the combination that turns your books from a source of frustration into something you can actually make decisions with. Thanks for watching, and I'll see you in the next video.